Hello everyone, PS from PS Invest Plays here today. After rising approximately 440% in 2020 and early 2021, Roku stock has been under constant selling pressure. In 2021 alone, its stock has shed 35% compared with S&P 500, which has gained 18%. Is this trend going to continue? Or we can expect higher stock price in 2021 and beyond. In this video, we will understand its business, its financials, its future outlook, and review its charts using Elliot wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. Roku, ticker ROKU. Roku is an American publicly traded company based in San Jose, California, that manufactures a variety of digital media players for video streaming. Roku has an advertising business and also licenses its hardware and software to other companies. It is the connected TV platform leader in the US. It operates in a rapidly expanding market, and it continues to attract advertisers keen on its brand and advertising reach. I had covered Roku a couple of months ago, and you can watch my video by clicking in the top right corner. In the previous video, I had extensively covered why Roku is an excellent buy and why it is poised for secular growth for the next decade. Today, I wanted to provide an update to my viewers on Roku stock as its stock price has been trending lower. Roku relies on a lower margin hardware strategy to attract users. These users are then monetized on its higher margin services platform. Roku's monetization strategy is based on a platform agnostic, ad-supported video on demand AVOD business model. The Roku channel, TRC, is designed as the go-to platform for streaming publishers to sell their ad inventory. In addition, the company recently introduced Roku Originals. It represents the company's foray into originals production, which has also seen encouraging results. The company also owns the OneView advertising demand-side platform DSP. Roku has traditionally focused on brand advertising dollars for its platform. That opportunity is worth a massive $70 billion annually for linear TV in the US. It remains Roku's most important market in leveraging the shift of ad budgets from linear TV. However, programmatic advertising has been gaining significant traction recently. Marketeers are increasingly demanding ROI-based advertising. OneView leads Roku's programmatic ad efforts with marketeers. Therefore, Roku has certainly come a long way. It has successfully evolved itself over time while capitalizing on the secular shift to AVOD streaming. As a result, it has also witnessed incredible growth over the last couple of years. Roku's ARPU, average revenue per user, continues to increase rapidly. ARPU considers the revenue contribution from its player segment. However, its platform segment is the main profit driver for Roku. Roku's platform segment has also seen stellar growth momentum. It demonstrates Roku's remarkable monetization capability. Roku's ARPU grew by 46.6% year-over-year in Q2 2021. Moreover, it also grew by 13.7% quarter-over-quarter. Roku's platform year-over-year growth reached 117.5% in Q2 2021. In addition, quarter-over-quarter growth was 14.1%. In the connected TV, CTV segment, YouTube is the market leader. The leader owns a 36% share of the market. That still leaves plenty of room for players like Roku to grow. The CTV ad market is expected to grow by a CAGR of 25% by 2025. reaching $27.47 billion. Roku's revenue is expected to increase by a CAGR of 27.6% by 2026. Therefore, it seems that Roku's estimates are very much in line with the market's expected growth rate. Therefore, I don't think Roku's growth rates are unreasonable. If Roku could capture even more growth opportunities, it could lift its revenue outlook even further. Roku has been building up its clout in the small and medium business SMB space. The local TV market for the SMB is worth about $16.4 billion annually. It's a much smaller segment within the linear TV market. However, it's still large enough for Roku to pay close attention to it. Importantly, this is a market where Roku is very well equipped to capitalize. Roku's OneView DSP is specifically equipped to target SMBs. Roku is a clear leader here with 46% of the CTV platform market share. Its performance advertising segment grew a phenomenal 300% year over year in the recent quarter. Recently, Roku introduced an app within Shopify's marketplace. The app is expected to be launched in November. It allows its sellers to place performance marketing ads on Roku's platform. Shopify has about 1.7 million sellers on its platform, and it is growing fast. Roku's collaboration with Shop would allow Shopify merchants to adopt the pay-as-they-go format without committing upfront budgets. Leveraging Shop's merchants is expected to give Roku an important boost for its programmatic ad reaches into e-commerce. It is a space where Amazon has been so successful with its own marketplace. Amazon derives about 90% of its ad revenue from its e-commerce marketplace. The programmatic advertising opportunities are definitely growing fast for Roku. It demonstrates that Roku has consistently been able to penetrate new growth markets successfully. Now let's look at the financials for Roku. Looking at the financials for Roku, revenue, gross profit, EBITDA, net income, EPS, earnings per share have increased considerably. Even if you discount 2020 and compare the 2021 financials with 2019, they have increased by a very good clip. In the chart on the right, free cash flow, FCF, currently stands at $1.32 per share. Even though FCF has turned positive, the stock price to FCF ratio has not increased by much, suggesting that the stock is undervalued. In the chart on the left, price to earnings ratio, PE ratio, currently stands at 177. The PE ratio has been declining for 2021 and earnings are increasing at the same time. Roku is expected to grow its revenue by a CAGR of 27.6%. Also, the company recently turned EBITDA profitable. It's also expected to gain operating leverage rapidly and significantly improve its forward EBITDA margins. Therefore, given Roku's tremendous opportunities ahead, its stock doesn't look expensive now. In short term, expect some turbulence, but long term the future for the stock appears bright. This is also indicative in the charts where I see the stock price to increase considerably in the next 3 to 4 years. Now, let's take a look at the charts of Roku. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Looking at the charts of Roku, the bull run that started way back in 2018 is still not over. The first 3 waves are completed, and wave 4 correction is potentially not complete. It has completed its 2 waves, which is wave A and B, and wave C is approximately 100% of wave A, giving us a target of $272.57. It could potentially go down to that level or in that range, and that would be an excellent buy range. After this correction is completed, wave 5 bull run should resume. Wave 5 is an inverse 161.8% retracement of Wave 4, giving us a final price target of $654.38, which translates into 180% profit in the next 3 to 4 years. Now, let's summarize. As I said earlier, Wave 4 correction is potentially not completed. I would recommend nibble any pullbacks and accumulate any corrections. $272.57 is the range, which is an excellent buy range and should result in Wave 4 completion. I would recommend holding ROKU for the next 3 to 4 years, as I see a price target of $654.38, which translates into a 180% profit in the next 3 to 4 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.